Almost all cryptocurrencies have been bleeding the last couple of days, and that sparks the question for a lot of people: what will my favorite cryptocurrency do in the upcoming days and weeks? And that's why I think it is important to do a price analysis and price prediction on some of the biggest cryptocurrencies out there. Cardano is the fourth biggest cryptocurrency in market cap right now, so I think it is very interesting to do a price analysis on the price of Cardano to see where the price could go in the upcoming days and weeks, and to sketch out some scenarios of where the price will go. So if you are interested in that, make sure to stick around, and then we'll get right into it. Welcome back, everyone. So now let's actually get onto the analysis. As you can see, we are on tradingview.com 4-hour time frame, just a Cardano against the USD Tether on Binance. So basically in my analysis, I'm using some trend lines, some exponential moving averages, some key levels, and some Fibonacci retracement. So let's first take a look at the price, what it has been doing. As you can see, from the beginning of August, Cardano actually had a massive uptrend, and then it turned into a small consolidation period here, bouncing kind of between these ranges with some outliers. And now it is starting to look like, if you look at the exponential moving averages, that the price will go into a downtrend. Me personally, I'm still bullish on Cardano. That is both due to sentimental reasons. I'm not invested in Cardano, but I do think that Cardano is here to stay, and that there is a lot of upside potential, and also because of fundamental reasons. If you want to know more about that, leave a comment down in the comment box, and I will make sure to make a video about that too. But now we are actually only doing a technical analysis, and the technical analysis is telling us very different stories. Actually, that the price of Cardano is going into a downtrend, breaking through support, descending trend lines actually holding the price back. So yeah, that doesn't seem too good. So for this price analysis, I have sketched out 3 scenarios, 2 of which are bullish and 1 is bearish, and we're just going to go over these scenarios and actually point out some of the possible trades along the way, because I think a lot of you would find that interesting, and that to me is the most interesting part, because there you can actually make money. Of course, analyzing and predicting the price is nice, but when you can actually gain something from it, that's even better. So let's start with the green scenario. The green scenario actually thinks, or when the green scenario holds, it is that the price from here on, it will bounce once again. It bounced twice off of this key level, which is based on the 2.0 psychological key level, which is quite strong, as you could have seen here as well. And also based on this trend line, which is quite recent, but it already has another touch. So that shows that it has been picked up, and it has been validated a little bit, at least on the 4-hour time frame. So the green scenario means that this support will hold, and if this support holds, I think there is enough bullish momentum to actually shoot through this trend line, which has quite some hits in the last few weeks and days, and that it will actually move through this key level, which in turn gives it more bullish momentum. And then I think the first level where it will gain some resistance is this red area. So first of all, this green box is a possible trade area, if you believe in the green scenario, and this red box is a possible trade area, but then for a sell. So this red resistance area is based on the trend line. The EMAs will probably come into that area, and it is based on the 0.382 Fibonacci level and the key level. So here I think it will have some resistance, but after the resistance I think it will retest this key level, after which it will break the key level where it bounced off from, and when it breaks that key level, it will gain more bullish momentum, and basically I think Cardano can then start another uptrend. So that's the first scenario. But now let's actually look at the second scenario, the yellow scenario, and that scenario is based on when the 2.0 psychological key level does not hold, which would not be good, but because I think it is a very strong support level. But let's look at what I think another scenario could be, that if it does break. So if it breaks, I think there will be some more bearish momentum. But I do think that the 0.618 together with the 1.8 psychological key level and the key level above it, I think that could provide enough support to actually make Cardano get some more bullish traction. Basically, it's not the same as scenario 1, the green scenario, where off the support touch it will instantly gain enough bullish momentum. No, I think when this support breaks, the 2.0, actually a lot of people will think, maybe I'm not too bullish of Cardano anymore. So what I think is that when this support holds, I think it will already find resistance at the 2.0 resistance together with these two trend lines, the trend line crossover. I think it will instantly gain some more resistance, and after that I do think that it will break through, but maybe it will gain some more resistance at this key level again, and then break retest of this trend line. Let me actually make that a little bit clearer. So basically it just hits this key level, bounces here again, then maybe it bounces off of this key level, which was also in scenario 1, after which it will bounce off this, which will then act as support. So basically what I mean to say, I know that was a little bit difficult, but what I mean to say is that when it breaks through this support, I do think it will find support at this support level, and that it will go into an uptrend after bouncing off of this support level. But I think the uptrend is way slower than the first scenario. So you should take into account more resistance touches, and basically a slower uptrend. So more like this. And this one should probably be more like this too. And then this one a little bit more like this. But I do think in scenario 2 that again it will be an uptrend after the support touch. But of course there's also scenario 3, which would in my opinion be a bad scenario, but very possible. And that is basically when I mean the price is now already very close to the 2.0, so the 2.0 key level could definitely break. And then there is a chance that this key level breaks as well. Although right now I think that key level is very strong. Oh, and to let me come back at scenario 2. When this key level breaks, if you think that scenario 2 is the more likely one, then this would act as a nice trade area, I think. Because in my opinion, this key level is very strong. So again, with scenario 3, what I just said, I think this key level is very strong. So if it breaks, I think there is a lot more bearish momentum to come from the price. And at this point is already, I think it could more be like when it breaks through this support, it could instantly go to this key level and then get the break retest of this key level, because you know, still in my opinion this is very strong, so the break retest would be very strong as well. And then I think that the price could even go as low as 1.5. In my opinion, if 1.5 breaks, we are really in trouble. So that's maybe for another analysis, but that's basically scenario 3, that even this support does not hold, and in my opinion that would be very bad. So let's hope for scenario 1 or scenario 2, but you should always keep the worst scenario in mind, just so that when it does happen you can actually maybe capitalize on that bearish market with some possible sell trades. So basically that is my price analysis and price prediction set out in 3 possible scenarios. If you have any questions about the scenarios, or if anything was unclear to you, please make sure to ask me in the comments, and I will make sure to respond to that as soon as possible. As for now, thank you for watching, and I will see you in the next video or next analysis. Bye.